So, mutual funds are very simple tools for investing. So, for someone who doesn't have time or someone who is starting new, the risks of stock market or stock selection or analysis that goes into buying and selling might be jittery in the initial period. Or let's say the market condition is good or bad. If I ask this question to a beginner, it will be very difficult and we shouldn't even expect them to answer because arbitrarily you will see a news and tell, or probably it will be very confusing for that person to get the person to say I feel the market is so and so. Also it takes time. So this kind of analysis is supposed to be learned over a period of time. So whenever we are starting or whenever there's a fresher or a working professional who doesn't have time, or let's say housewives or someone who took a career break, wants to do something but not really take too much risk, then mutual funds are the best tools. On one side is it's because you can start very small. You can start as small as 500 rupees in this area. In fact, you can put as much as you want also over a period of time. And we can do SIPs, which is systematic investment plan, which almost gets the discipline of not really having to time the market. You don't have to read the market. You don't have to read the charts. You can still begin from wherever you are. That's another advantage. And the most important thing is mutual funds are dealt by fund managers. And now the fund managers are professionals. So one thing is they're qualified to run a fund. And second thing is the data or the kind of analysis and systems and all the processes that they would be having under their hand is way, way advanced than what I as an individual can sit and make it myself. It is time consuming. Also, it takes a lot of learning before we get into that level. So when we do mutual funds, it really saves time, effort, and energy because there is a professional who's handling this and he or she will take care of the market ups and downs.
Yep.
Only thing is, when we start, we just have to know what is it that I want to invest in and what is the amount of risk I'm ready to take. Why risk? Because just like any other investment, mutual fund is also associated with some asset class. It
Right.
could be equity, it could be debt, it could be gold also.
Mhm.
So when we invest in gold, we cannot expect the return on equity. So there are very few differences which we will have to learn. And the only thing, most important thing we have to learn is why am I investing as a beginner? And when I'm investing, when I know why I'm investing, let's say for paying off home loan or for child's education fund or for retirement, if these are well defined, then I know that I have 15 years in hand, or I have 10 years in hand, or I have 5 years in hand. So these things are supposed to be decided by us, the individuals. Once that is decided and we know how much we can invest every month, then which fund do I have to pick? That's the only decision we have to make.